Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on natural gas and starting with the daily time frame here. The bulls are still remaining extremely strong, and we can draw an uptrend line here on this oversold bounce, which has become much more than that at this point. And we can see just how strong this bounce has become by the magnitude of that uptrend line, and you can see how just perfectly it's been hitting these consolidation higher lows with that continuation to the upside. So the key supports that I'm looking for the bulls to maintain in control to keep the higher lows intact are going to be this low down here. We have a ton of wiggle room before we were to hit that level. That's down at 312.1. And then the next level I'd be looking at is the low of the recent pullback, and that is currently at about 3235. So 3235 is the important support in the short term. If we lose that level, we'll be looking for this uptrend support line to be tested some point in the near future, likely early next week. So we did close very weak down at the low. We had a bearish reversal candlestick on Wednesday. That was negated with the bulls showing up on Thursday, and oil had the same thing. So the energy sector with bearish reversal candlesticks Wednesday, negating them on Thursday, held up really well, pretty much better than the bulls could have hoped. And now today, seeing that weak close, we can be looking for a bit more downside to start next week. So 3235 key support, and in terms of resistance, we have multiple tops in the same area: 3347, 3235, and 334. So 3347 is the top there. The range we're watching: 3347 resistance and 3235 support. Those are the tightest range to be watching. If I was a bull, I would be exiting if the low of Thursday broke. And if I was a bear, I'd be exiting if we hit higher highs. And zooming out to get a broader picture of what's going on and looking at the weekly time frame, we can see that we do have a bit of an upper wick of profit taking. A bearish reversal doji last week negated this week, but this is another bearish reversal candlestick. It's it's a spinning top, which at the top of an uptrend, and I would consider the past 6 weeks an uptrend, it does indicate indecision and the likelihood that the bears are close to taking over here. So keeping an eye out also for a potential volume climax. Volume climaxes often signal the top of an uptrend or the bottom of a downtrend. So there's plenty of things to be keeping an eye on if we are looking for the bears to potentially take over, because we have to keep in mind bears are in control of this trend right now on natural gas, where we have the all-out dump, and right now it's a lower high very likely to form, and then we'll have to consolidate and look to form a higher low. So I am cautious on natural gas. The bulls are still strong on the daily, but we had a weak close here to end the week. So next week's going to be very important. If we cannot break the high of this week, we will look for consolidation. UNG rejecting from the 100-day moving average resistance. That is at 791, rejecting on Wednesday and Thursday, and seeing this weak close here on Friday. The good thing for the bulls is that the bears have very little volume to the downside. It's a very low volume day today. You can see the volume is dropping off all to end this week. And the key level for the bulls to maintain higher lows on UNG here, I'm looking at 772, which is a double low from Thursday, or that Wednesday and Friday. And if 772 breaks, it's a long way down to fill this gap to 750 on the daily time frame. So the bulls are still holding on, but if we break that 772 level to start next week, we are looking at a significant amount of downside before we would encounter that next support level. So on the weekly time frame here for UNG, same thing. We had a bearish reversal doji last week. We negated it this week with further follow-through, but after such a strong bounce, we are cautious as a bull. We are on the verge of a bullish MACD cross. Bulls are still holding on here, but we do know that some consolidation could be coming because this daily chart, like I drew on that other natural gas chart, just has not seen much significant consolidation. Granted, there's been periods of consolidation, so we are building support on the way up. We just need to be cautious. As a bull, after that big-time dump and oversold bounce has certainly played out significantly at this point. So we'll be watching it all next week. Bears have a bit of momentum heading into next week, but at this point it is not significant as it has not done anything to change the higher low uptrend. So I appreciate you watching. We'll check back in as always. Have a great rest of your weekend.